Hello, everyone. Awesome that so many people have found a way to our great panel. And well, it will be a good one, I guess. I hope so, but not pressure, right? So, yeah, the title is High Yield or High Risk. And before we dive into this, I would like to ask you actually, who knows what DeFi trading actually means? Okay, nice. Okay, so who has not yet 100% understood what's behind this DeFi trading term? Both, okay. So maybe you can bring some light into this just to have a little starter here.
Okay, I can try. So, should I introduce myself, by the way, first? So, I'm quick intro, I'm CMO and CBDO at CONF3RENCE. We are the leading DEX, which stands for Decentralized Exchange on the TON blockchain, which is the native blockchain for Telegram Messenger. So, speaking about DeFi trading and why I've chosen, both answers, meaning that I know what that is and I use that, but sometimes maybe I think that I don't fully understand it because it's a complex thing, meaning that when we say DeFi, well, it stands for decentralized finance, right? So I think that everyone knows that, but when we're speaking about, generally about DeFi, then sometimes we just think, is this case a DeFi case? Or is that case some kind of an in-between DeFi and CeFi, which stands for centralized finance? And meaning that since there are more, I would say, sophisticated strategies now, which include different use cases, and sometimes they take different things from different worlds. Quite often, I just can't say if a specific use case is a DeFi case or not. So that's the problem. So I would say that quite often there are no strict boundaries between the use cases. And that's why I've chosen both answers.
Thank you very much, Andre. So obvious it's, well, the thing is, I'm coming from traditional finance, actually. So where trading means a very special type of interacting in finance, right? So that was kind of confusing for me, to be honest, at the moment or at the beginning, but yeah, well, never mind. So maybe every one of you shortly introduce yourself as well, like Andre did.
Yes, of course. Good morning, everyone. Guten Morgen an die Deutsch sprechen, to those that speak German. My name is Per Möller. I'm leading business development and operations and growth on behalf of Swissborg over here in DACH countries. What is Swissborg? Swissborg is a wealth management platform. We offer trading and buying and selling of crypto assets, of course. And on the other hand, what makes us a little bit special, we have built something called Meta Exchange. So we aggregate plus 25 DEXs and their on-chain liquidity pools of the tokens and so on. Plus, on the other hand, we offer different strategies on earning yield on cryptocurrencies. And you can basically use our app for everything crypto and to navigate the space of Web3. And the app is really simple to use. And my opinion, sorry, it's the best app on the market.
All right, I'm Bastian. I'm the CEO from Bitbull Trading. We have the biggest education platform in the market in Germany, Austria, and Switzerland. We do only chart analysis. We're working together with centralized and decentralized exchanges. So yeah, we're doing the part of the trading stuff. So I'm doing the chart analysis for my followers, and we do the education for them, that how they can invest, how they can trade, how they know is the right risk management and all this stuff. And that's what we are doing, yeah, full time, 24/7.
Yeah, last but not least, Marcel Ullmann. I have been introduced as general partner of Blockchain Founders Capital, but today I'm here as portfolio manager at TradeWest, which is banking as a service platform in Munich, Germany. But I am a DeFi guy. I'm a DeFi guy from the beginning on. I was part of DeFi when we didn't call it DeFi because it didn't exist. I was part of Uniswap in 2017, 18, and so on. And since 2021, I'm doing crypto full time. I have an own investment company where I follow strategies. And at TradeVest, that's why I chose TradeVest for today. I am developing DeFi strategy, and we are enabling retail clients to invest in this strategy. So I'm the DeFi guy today. By the way, I wrote a book about DeFi in 2019. It's called DeFi Revolution. I told everyone that in 5 years, everything will be tokenized, so don't believe me today. We are not at this stage, but we will be in 5 years. Okay.
Thank you very much. And as far as I know, you also have a course right now together with Crypto Nerds, right?
Yeah, exactly. I hope you guys have seen the marketing everywhere here at this amazing conference. What I did is to build a DeFi training course for beginners. At the moment, we are already working for the pro type. We call it DeFi Masterclass. So have a look at it, please.
Thank you. Okay, so let me ask each of you a simple but maybe fun question. We will see. Because I would like to know what is the highest yield rate you've personally seen in DeFi, and did it turn out to be a real one or or a good one?
So yeah, I might kick this off and take this question. So I saw yield rates around 400% API. And of course, in this case, at least in my opinion, you always have to ask yourself, where does this yield come from? Does it come from legit sources, like, for example, trading fees or staking or borrowing? Or on the other end, does it come from token emissions? And in this case, most of the times when you see such a high yield, you will have to ask yourself like another question, where does the yield come from, like I said? And on the other hand, you should always ask the provider or the protocol that offers this yield, like, can you explain where this yield comes from in one sentence? And if they say this yield comes from our native token, from token emissions, you can be very, very sure that this yield is not sustainable. So if you see such a high yield, I definitely say don't use it and don't take part in earning this yield. It doesn't make any sense.
Does every one of you confirm to Pierre?
Absolutely.
Yes, but these are not the highest yields I've seen, because actually even on our platform, so, but by the way, I think that I didn't answer the previous question about the definition of DeFi trading, but put it simply, so if you trade something, but you do that in a decentralized manner, meaning that there is no central authority that can ban you from doing something. You just connect your wallet and start trading, but we usually do not use this term, we use the term swap, meaning that you swap one token for another token, right? But even on our platform, since we're showing these APYs, APRs, and so on, which stand for annual percentage yield and so on, right? We limited the the figure to 999%, meaning that when the yield is higher than 999%, we just show it is higher than that. But why does it happen? It happens because when a new liquidity pool is launched, and it is very small in the beginning, and there are some, let's say, incentives, or there is some trading, which is probably, I mean, the volumes are not that high, but compared to the liquidity pool size, they are high. So there is a small liquidity pool with small trading volumes, but the difference between that, it leads to these very high yields, meaning that basically that's correct. That's true. That in a very short time, like for a very short period, you are actually able to get these yields. But in absolute money, it'll be nothing, right? It's just very high percentages, but absolute money, I mean, like in US dollars, it's not that high. And I totally agree with you. I think that when you don't understand where the yield comes from, most likely it means that you are the source of the yield, right?
Yeah.
So and I totally agree that although sometimes these high yields, they, we can even explain why they are so high. It doesn't mean that you should do that, because if you don't understand it, and if you think that it's too good to be true, then probably you shouldn't do that. You shouldn't touch this, right? If you don't understand that.
I kind of disagree, because I do not have something against an APY which is higher than 100%, and I take it if I get it. But what you have to do is sell the dump token.
If you are an inexperienced user, you never know when to do that, right? So that's the problem.
I agree.
Yeah, you have to do your own research every time, because I see it as well in my community. What they want is they want the green numbers, and best case tomorrow the Lambo in front of your door, because they see every time only 100%, 200, 500, 600%, yeah, and then comes the FOMO back, and all the people saying, oh, okay, yeah, we're going in, and I said, guys, be careful about this, yeah. Do you really making your own research and everything about this project? And then probably 80% said, no, but it sounds good. So, okay, good luck, right? So,
yeah, and just to add on that real quick, I think a good yield is a boring yield. So a good sustainable long-term yield where you can earn a certain API on your token that you deposit, in what way you ever want to earn this yield, it should be kind of boring in my opinion. So I think 10-20% in this case over a long period is definitely feasible. And I know it sounds boring, but it's sustainable and has way lower risks than these, I don't know, 400-500% APIs that some protocols offer.
And the good news is there are yields, reliable yields out there. You only have to have a look at what we are talking about. No? We are talking about a 150 billion TVL, and if you have a look at the big 10 protocols, then you see there exchanges like Uniswap, and you see exchanges like Hyperliquid. This is what I would understand of trading, and I had a look before the panel, and Uniswap is making 3.6 million fees a day. Hyperliquid is doing 2.5 million a day. And these are coming from fees that are users paying to use these protocols. And this is the good news, because users are there, they are paying fees to do it. And we, as a community, are getting these fees. This is also the difference between DeFi and TradFi, because in TradFi, these fees would go to the companies, but in DeFi, we are getting it, and this is why I love it. You have a question?
I think the good thing is also with Hyperliquid, I think they make 90% buybacks, so they also 99% buybacks, so it's also very positive.
You are working for Hyperliquid? It's also interesting, sorry to absolutely agree. I love Hyperliquid, and I also see the ecosystem. What I think, and maybe I would like to, I'm interested in your opinion about that. Why is Hyperliquid valued, I think at the moment at 45 billion with 2.5 million fees per day, and Uniswap is valued at, I think, 9 or 8 billion with 3.6 million a day. And why are people using Hyperliquid and not DYDX or GMX or all of the other exchanges? So
it's the hype.
Is it?
It's the hype. It is, because I see it in my community as well. We have 140,000 traders in our community. The thing is, how they come at the moment to the DeFi, because they see the numbers and they hear about the first time about the DeFi trading because of Hyperliquid. Because what did Hyperliquid very, very well was the marketing. Because they doing the point system before the token launch and all this stuff. So you use the platform, you're getting the points, and when you're getting the points, you can get the Hyperliquid token. What they are doing right now, they're burning it, So it's very, very interesting for users, because it's the first time that you use a platform and getting a benefit from that. So all in all, imagine when you, for example, trade on Hyperliquid and you're going to a stop loss or something like that in your trade, you're getting still, when was it, some months before, still points for that. And when you get the points for that, it's not a 100% loss, because you know exactly, okay, I can transfer the points to the token later on. So I think this was a very, very nice and smart move from the Hyperliquid team. And that's why a lot of people are talking about that, and also the high volume traders in the crypto industry, the Bitcoin whales and all the stuff, makes very, very famous in the Twitter space at the moment. All are trading the big high value trades on the Hyperliquid platform. So this comes then on top of that as well. So in my opinion, that's why a lot of people thinking right now, when they hear about the DeFi and DeFi trading and all this stuff, first of all, they're coming then to the point Hyperliquid.
Yeah, I fully agree. Plus, what you just said is very valuable. So they're buying back tokens, hence the token has been performing very well. What is the best marketing for a platform is if your token performs well and is trending most of the times on CoinGecko and CoinMarketCap, which happened a lot with Hyperliquid. So a lot of people see it. And of course, for example, I think DYDX is great too. Or of course, Uniswap as a DEX is great too. But their tokens don't perform that well. So people know Hyperliquid, they see Hyperliquid, and if they think about perps trading on chain, on a DEX and so on, they will think about Hyperliquid and they will go to Hyperliquid. It's like that easy in crypto sometimes.
I agree with you. That's my name is Marco. I agree with you. That's a lot of hype because the token perform very well. But didn't you think also it's also about the user interface? Because I use also GMX or DYDX, and for me, Hyperliquid was the first perp DEX. It feels like maybe equal, like you use maybe Binance or other sexes, yeah.
Yeah, I fully agree with that, and this is also one reason why we added Hyperliquid into our Meta exchange on Swissborg, because like you said, the product is very good and the liquidity is very good, so for us it made a lot of sense to add them instead of, for example, DYDX or GMX or something like that. So I agree, it's a great user interface, great UI, and it's a very good product in my opinion. I use it myself, so I'm a fan too.
Yeah, I agree absolutely, because what they do very, very well and very good is the interface, because before what you have very, very strange interfaces. It's very difficult sometimes to use. Sometimes you need hours of that to understand how you can use it, you know. But on Hyperliquid, they did it like a normal exchange, like Bybit, like Bitunix, like whatever, you know. And this is also a very, very key fact in this point, because when you do the interface very simple and user-friendly, then you're getting also the whole retailer, the whole new people who comes in the market, because they don't want to search 1 hour or 2 hours to find some options where we can use it or however, or they have to watch 2 or 3 hours tutorial video on YouTube or something like that, you know. So what they did very, very well is you come to Hyperliquid, you see everything is very nice, you make an account and that's it, you know. So it's very, very simple, and absolutely agree about that. So they make a very, very good job.
So that was actually the opening question. So
Yeah.
20 minutes later, so we are half of the time now. But I like the vibe, so I mean, it's just perfect if a panel turns out like this. Maybe a question to Bastian. What do you think, what are the most common high-yield strategies you see in practice, and what mistakes do traders often make?
Yeah, this is very, it's very simple, because what traders want is profit, you know. Doesn't matter if you trade on decentralized or the centralized exchanges. So the big problem is they see what I said before as well. They see only the green numbers, you know. It's also very difficult because a lot of people out there in the space, a lot of influencers saying, promoting some scammy projects or whatever, or Donald Trump is coming with his own coin, and all these retailers who comes in the market, you know, the first time they're getting wrecked and going out of the market. And this is then also a bad thing about the whole industry, you know. But the biggest problem is they over leverage. A lot of people thinking, oh, okay, I go on the market, I put 50x, and then I keep the trade running, and I hope it's going up, you know, because a lot of people going into the market and think it's a 50-50 game, yeah, but it isn't. So if you don't be educated, if you don't be a trader who's doing the analysis very, very well and all this stuff, you're losing a lot of money, you know. So all in all, I would say the biggest problem is they want too much in too less of time. So trading is, I said it every time to my community as well, trading is a marathon and not a sprint, you know. So you have to be focused on the next months, next years. So yeah, only step by step brings you to the top. So all in all, I would say, yeah, high leveraged, and they want too much too fast.
Yeah, I think being patient is a problem we all have actually in the whole society. It's not about only trading, right? But this is another topic. Marcel, I would love to get your perspective on what are still the biggest challenges for safe participation in DeFi. Do you think it's complexity, regulation, or user experience? I mean, you experienced the whole cycle, right?
Yeah, we already talked about it, and of course it's all three: UX, complexity, and of course it's also liquidity. I don't know what your what the liquidity on StonFi is at the moment, but the thing is that when we look at DeFi, we have 400 blockchains at the moment where we can do DeFi. So where do we use DeFi? So Ethereum with 90 billion is the biggest one, with of the 150 billion at the moment, so it's roughly 60% of all of the TVL. And the other 400s are starting with, I think Solana is second with 11 billion. And I don't know, do you know how much ton at the TVL at the moment has?
You mean the whole ecosystem? I think it's about 500 million or so. But it's not the biggest blockchain.
Yeah, and this is also a problem. So you need liquidity on every exchange because of the systems we are using, like the automated market maker systems. And we also have to use all of these bridges. So the complexity in some is very high. And I don't know if I look into the audience, how many of you already use DeFi things? Oh, nice. So we see it's half-half, huh? And I think the problem is that you do not learn DeFi if you do not use DeFi. And you cannot speak about DeFi if you never used it. But what I think will happen in future, this is like Hyperliquid is doing it. You should develop apps that where nobody knows you are trading on a blockchain. So like kind of Web 2.5 or something like that. And this is the way to do it. What I'm also keen on is like we had our how's it called? The stable coins and also the RWA thing is coming. And this is good for DeFi, but we have to build things where people can use it. So,
yeah, but they trade stable coins and RWAs on DeFi as well, right? So it is about user experience. I agree with you, but it is getting better and better every day.
It is. It is.
Yeah, I would like to add to this. So, in my opinion, for example, if the average retail user wants to use DeFi products, it's like super complicated. I mean, for us, it might be easy. It might be easy to connect our wallet to a certain RPC, connect the wallet to a certain, for example, DEX whatsoever. So it's all super easy for us. But I think most people don't understand how to trade cross-chain and so on. So having to use all these bridges that also tend to get hacked or exploited a lot can be a huge problem in this case. So I think what you just said is very valuable. So in my opinion, DeFi needs to be way easier for the average retail user. So for example, to give you a quick overview of our app at Swissborg, what we do there, we have built something, it's called Meta Exchange. So basically our app is super easy to use, and I don't want to shill it right now, but it's super interesting. Give me a second. So we aggregate 25 DEXs on 5 different blockchains at this moment, and our founder has this vision to build the biggest liquidity layer in all of Web3. So what we are planning to do is add more and more blockchain, more and more DEXs and so on, all in an aggregated app and in a regulated app, so to speak. This eliminates the problem because DEXs and wallets might need to go for a VASP or CASP license in the near future. So if you have an aggregator like Swissborg, for example, that aggregates all the DEXs and so on, the liquidity pools of the tokens you want to buy, you have several advantages. In our example, just to give you one, in our case, just to give you one more example, it's very cool if you want to swap a token from the Solana chain, which is native on Orca, for example, which has the liquidity pool there, to a token native from in Avalanche on the JFL DEX, the biggest DEX on Avalanche. You can basically do a cross-chain trade and trade the token which is native on Solana to a token which is native on Avalanche without even seeing that you are doing a cross-chain trade or something like that. So you don't have any bridges whatsoever, and it's super easy to use. And I think this is where retail comes into play, and this, in my opinion, are the solutions that retail need. You know, just like aggregate DEXs and so on-chain liquidity. And in this case, sky's the limit. You can add more and more chains and the DEXs and so on. So you can basically make the whole process of trading cross-chain and of trading DeFi and on-chain way easier, because our average user, I'm going to be honest, like they're older most of the times because we are a wealth management platform, and they don't even know that they are trading on-chain at this moment through DEX, for example. So this is, in my opinion, very cool, and this is what you exactly said. We need something like Web 2.5, where the average Joe can come in and still use DeFi product and take advantage of all the cool things that DeFi has to offer.
Thank you, Pierre. Would you agree with Pierre? I mean,
I just wanted to add that actually we are building the same thing, but for different blockchains, meaning that we are building a protocol. We have already built it, but we are, developing it further. So a liquidity aggregation protocol which aggregates, let's say, consolidates, unifies liquidity from different liquidity sources. And we are going cross-chain soon, meaning that basically the same thing, I think, right? So like unify the liquidity and do it cross-chain without bridges, but other different blockchains.
Yeah, definitely. That's very cool. But just out of interest, like, I mean, for us, like here in Europe and so on, it's very important to have it like in a regulated app. So everything needs to be regulated, especially with MiCA coming into place. And next year we have DSC8 coming into place. So more regulations coming in for European users. So this is why I'm asking myself if it's, I mean, I'm a big fan of such stuff. I'm a huge DeFi fan. I trade on-chain myself. But I'm always asking myself, will those protocols survive, or will the app survive that is fully regulated, that needs to KYC their users and so on? You can think about KYC whatever you want, and it's totally fine if you don't like it and so on, but this is how it needs to be in the future. So if you have a regulated app, in this case, you can basically still, like I said, take advantage of all the DEXs and so on, but it's regulated. You know what I mean? So this is what I ask myself. But I know there's always a way around, and I'm not like trying to hate on that. So I really like this stuff, you know. I also like aggregators on chain, but still it's a huge issue, especially for the average Joe, the average retail user.
Okay, I understand what you're saying, but I don't fully agree first. And second, well, I don't like this stuff. I hate it, meaning all these KYC and so on. It's just like, right?
Who likes
from,
KYC?
like,
No one.
Yeah, no, I totally
we are coming from the decentralized world. We don't like this centralized stuff. That's why we are building that, right? And I believe
I like this guy. I like this guy.
I believe that if there are places or countries where this regulation like exists, it means that there are some countries, some other countries, which choose not to do that. And we will go to these countries because we can be incorporated in these countries. And if we are banned or we are told not to provide these services to people from some countries, okay, we can formally do that. If you are from this country, you are not supposed to use our product. But we all understand that people always find a way to use something if they want to use it.
Yeah, that's what I meant. And don't get me wrong, I'm a huge DeFi fan too, so I've been in the space for over 6 years, and most of my trading happens on chain. So to be really blunt, I don't like KYC either, but it's just how it is, like for a company like Swissborg, for example. But it's,
for you, it's correct.
It's a very good reply, and I totally get your point. Makes total sense to me.
There's also the thing about ethos. Why are we in DeFi? Exactly. We want no borders. We want to do what we want, and we do not want others to tell us what we have to do or we are allowed to do. That's why I'm using DeFi. And when I do a multi-chain swap, I use kind of things like Jumper or other aggregators to do this. And I avoid centralized exchanges like hell.
By the way, I use both. I mean, I use centralized exchanges and decentralized exchanges, but for different purposes. So sometimes SACs, it is more convenient, and I believe that currently for lots of users it's more convenient because it is safer for them. Because on DeFi, in DeFi, the risks are higher, meaning that if you make a mistake, then you are responsible for that, right? So you take the full responsibility. In my case, that's fine because I understand how it works. But I also know that for lots of people, it doesn't work like this. So they are afraid, and for them, probably it is better to go to a centralized exchange, but learn decentralized stuff, and then go to DeFi trading as well.
But good point, because I see that my community as well, they want the safety, because they said, okay, the centralized exchanges, I want, if something happened, I have my life support there, they check the transaction or whatever, and yeah, what you said, then if you're doing one mistake by yourself, then finish. Yep. That's it,
Awesome. Well, so what opportunities and risks do you see emerging from cross-chain trading? I mean, we have already talked about that, that you would have a solution for that, Pierre, I know that. But yeah, so, or maybe I need to reframe the question a little bit. Do you think that in the future we will see different chains working together without a bridge, so that they somehow find a solution which fits to every chain?
It's an interesting question. I would like to have that. There are already some steps into this direction. There are coins where you burn it on one chain and it's automatically minted on another chain. I don't have I have nothing against these bridges, because bridges are working very well. We even have bridges for coins, like the Circle bridge for USDC. We have bridges like Jumper, and they are working very well. But would like to see that, yeah.
I would say that. Have you finished, Maya? I would say that. Although there are working solutions now, I don't like bridges because, well, they work, but they're risky, meaning that these cross-chain bridges are one of the major vector attacks for fraudsters, hackers, and so on, meaning that literally billions were lost when some bridges were hacked. So that's why we are building the protocol, and I believe you too as well. You do that as well. Building a protocol which enables cross-chain swaps, but without bridges. So that's the point, because nothing can be hacked. And speaking about the risks, it's one of the risks, right? So or any like hacks or something like that. But speaking about the you were asking about the opportunities. Well, I would say that the blockchains, since blockchains are not people, blockchains are not organizations, right? They just can't do anything like that. So, but guys like us, we build products built on top of the blockchain, so using blockchains, which enable these use cases, including cross-chain swaps, let's say, and so on. But speaking about the opportunities, of course, it is a good thing because there are hundreds of blockchains. We can say that they are more or less isolated, and liquidity is fragmented and scattered across the ecosystems, across the protocols, and so on. Which is not good for the users, because users in this case don't get the best prices, because when the liquidity is unified, they can get the best prices. And meaning when there are more cross-chain solutions, liquidity will be deeper, and we can call it like, I don't know, global liquidity, meaning that you use like this protocol, but you get access to bigger liquidity, which is very good, right?
To add to that, in my opinion, another huge chances, what you said is of course very valuable, but in my opinion, like most of the trading should happen on chain, because we don't have shady market makers and so on with their order books and their huge spreads, etc. Manipulating the market and the token prices and so on. So if people people use more DEXs and so on to trade cryptos, this eliminates the market makers and so on, like the spread that the exchanges set. So power goes back to the people in this case, and I think especially aggregators like you build it, like aggregating several chains and liquidity pools and so on, or what we built at Swissborg is definitely the future, because like you also said, the liquidity will always be very deep, and on some centralized exchanges you might have the problem of having very thin order books, and like I said, on top of that, shady market makers manipulating the price and liquidating the users and so on. So this is also better for the projects. If they have the control over their own liquidity, it makes a lot of sense to them, and several aspects like setting fees, for example, and so on. They can earn their own trading fees and so on and so on. But I will stop here because I could talk about this forever.
Exactly. So our time is already up, but I think really we could talk for hours about that, and maybe we should do that somewhere at the networking area or so. But I would just had one last quick question. Have you guys been scammed? No, just raise your hand.
Oh yeah. I've been rugged before.
Okay, so because it just shows that even if you are a starter, things like that happens, right? But you need to have skin in the game to understand, to fully understand.
That's how you learn. Sorry, excuse me for interrupting. That's how you learn, right?
Exactly.
But with small amounts, please.
Correct. So thank you very much to every one of you. It was an amazing panel for me. I hope also for the audience. Thank you. And if you want to talk to one of these guys, just get them now before they're leaving. But we need to do a quick selfie, please. Thank you.
Thanks, guys.
Thank you.
Thanks.